Good evening. It was a bad start for the Indian markets after a long weekend as the NSE Nifty closed below the 5,250 mark due to broad-based sell-off. The NSE Nifty opened with 30 points lower and was stuck in narrow trading range for most part of the session before sliding further in late trade. Both the main indices were down by approximately 1.5% each today. Barring a few pharma stocks, all other BSE sectoral indices ended in the red. Today's decline was led by metals, capital goods, PSU, power and banking stocks. The small cap space fared a tad better than the mid cap and the large cap pairs, but the overall market breadth remained negative. Lower than estimated US jobs growth in March coupled with higher inflation in China were the two main catalysts for today's sell-off across world equity markets. FIIs flowing in the beginning of April has been understandably lower as GAR was expected to come into effect from April 1st. Meanwhile, the net investment by FIIs in Indian stocks during the 2011-2012 was the lowest in last 3 years at Rs 479.35 billion. The India VIX on the NSE shot up by 8% to close at 22.33. Among the BSE sectoral indices, the metal index was the top loser, down by 3.5%, followed by the capital good index down by 3.1%. The power index was down by 2.5% and the PSU index lost 2%. Only the BSE Pharma index edged higher by 0.3%. The BSE Mid Cap index slipped by 1.3%, while the BSE Small Cap index lowered by 0.7%. Out of the 50 stocks in the Sensex, index notable losers were Hindalco, Sterlite, BHEL, L&T, Jindal Steel, Tata Steel, SBI, NTPC and Maruti. Among the major gainers were Cipla, Hindustan Unilever, Bajaj Auto, DLF and Bharti Airtel. An action-packed week is in store for the Indian markets. The corporate earnings season kicks off in right earnest on Friday the 13th with IT major Infosys announcing its Q4 results. Before that, there is industrial production growth and WPI inflation numbers to contend with on Thursday and Friday respectively. Speculation on what the RBI will do when it meets on April 17th will be another driving force for our market in coming days. Japanese shares ended lower for fifth straight trading day, with the Nikkei dropping by 1.5% today. The Shanghai Composite Index ended lower by 0.9%. Markets in Hong Kong, Australia, New Zealand, Philippines were shut on account of the extended Easter holidays. US payrolls rose far less than expected in March, even as the unemployment rate fell to a 3-year low of 8.2%. American employers added 120,000 jobs last month, the smallest increase since October. Chinese consumer prices rose by 3.6% from a year earlier as per the National Bureau of Statistics. That was more than the median estimate of 3.4% by The Economist. Food-related costs gained 7.5%. Meanwhile, gold gained today as investors turned to the yellow metal for refuge due to persistent uncertainty over the global economy. High crude oil prices and higher inflation in China also added to the allure of the precious metal. The Indian rupee fell today as global investors shunned risky assets in the wake of disappointing US jobs data last week and the Chinese inflation report today. Indian markets were shut on Thursday and Friday on account of holidays. Thank you. Wish you have a great evening ahead.